If you're a first-time home buyer with average credit and not a ton of money saved, you've probably wondered if an FHA loan is actually your ticket out of renting forever or if it's just another internet myth. You might have heard that FHA is easier, but then you see people talking about how strict rules, appraisals falling apart, and lenders picking apart your bank statements, and it feels confusing. So today, let's clear this up. I'm going to walk you through what FHA really is, what it actually takes to qualify, and some of the hidden gotchas that trip people up, so you don't waste time or get blindsided a week before closing, and it does happen. By the end, you'll know if an FHA loan is a realistic path for you right now if you're buying a house in Florida, and exactly what you need to fix or prepare for if you're not quite there yet. How you doing? My name is Emmett Dempsey with Treasure Coast Mortgage, and I've been a mortgage professional since 2007 and a mortgage broker and owner since 2020. And I've helped hundreds of buyers, just like you, use FHA loans to buy their first home. So everything I'm about to share with you today comes from real files, real underwriters, and real closings, not YouTube theory. If you do me a quick favor and go and hit the like button to help more viewers like you find this video, I really appreciate it. Okay, let's start with the big misconception. FHA is for people with terrible credit who can't qualify anywhere else. That's not really how it works. FHA is designed to be more flexible than many conventional loan options, especially if your credit history isn't spotless or your scores are just okay and not elite. But here's the deal. Flexible doesn't mean sloppy. We still have to show that you can comfortably afford the payment and that you can manage your debt reasonably well. Think of it like this. A landlord doesn't expect for you to be perfect, but they definitely care if you're chronically late on rent, right? I mean, FHA looks at you in a similar but more detailed way. So what do we actually look at? First, your credit profile. I mean, not just the score, but the story as well. I mean, have there been late payments in the last year? Are there collections or charge-offs? Have you had a bankruptcy or foreclosure in the past? And if so, how long ago did it happen? For example, I'll see someone with average credit who's beating themselves up. But their last late payment was 3 years ago, and everything since then has been on time. That's really good, guys. That person might be in a better position, FHA, than with someone with a slightly higher score buying conventional who has multiple late payments in the last 6 months. So if you're watching this thinking, my credit isn't the best, Emmett, it's not perfect, ask a better question. Is my credit at least trending in the right direction? That's what we want to see. Okay, next, income and debt. This is where a lot of first-time home buyers are very surprised because they think they make a certain dollar amount, that's the end of the story, right? In reality, we're looking at your debt to income ratio. Basically, how much of your gross monthly income is going towards your debt payments, including the new mortgage you're about to get. So if you've got a car payment, a few credit cards, maybe a personal loan, those all get added up all together. Then we layer on your future mortgage payment, principal, interest, taxes, insurance, mortgage insurance, and any HOA if you're getting it. And then we see how that compares to your gross monthly income. And here's a practical example. I'll talk with someone making solid income, but they just bought a new SUV with a big giant monthly payment. That one decision can be the difference between this works and this is too tight for FHA guidelines. So if you're planning ahead, one of the best moves you can make is to think twice before taking on new debt right before you try to buy. And don't do it during it. Don't go grab new furniture on a store credit card. Don't finance a boat. And definitely don't open a bunch of zero interest for 12 months because those accounts, those are shiny offers, they can absolutely come back to bite you in underwriting. I've seen it happen, guys, at the last minute. Don't do it. The third big component is your funds and bank statements, your cash to close. Even with a low down payment options, there are still upfront costs and closing expenses that we have to account for. So we have to verify where that money is coming from for the payment. See, this is where people get tripped up with things like cash deposits or random transfers from friends or family. When I look at your bank statements, I'm not judging you for Starbucks, guys. I really don't care. So I'm looking for large, non-payroll deposits that don't have a clear paper trail. For example, that couple $100 your cousin dropped in your account, through a payment app, right before you applied, well, we may have to explain that. and a bigger chunk of cash you deposited from selling something on Facebook Marketplace, well, that might not be usable at all. I know there's the real world, the mortgage world. Like, we have to source that kind of stuff, guys. I mean, FHA is really strict about making sure your funds are sourced and legitimate. So if you know you'll be buying in the next few months, try to keep things simple in your bank accounts. Have your down payment and closing money in 1 or 2 accounts. Avoid moving money all over the place like a shell game. Just don't do it. And if a family member is going to help you, with a gift, talk to your lender first. Talk to me first so they can tell you exactly how to document it. I call it show the flow. Okay, now let's talk about the house itself. Because FHA doesn't just approve you, it has to approve the property too. FHA is looking for a home that's safe, structurally sound, and secure. That means no obvious health or safety hazards like exposed wiring, major roof leaks, missing handrails where they're needed, or broken windows. I mean, an FHA appraisal is checking both the value and the basic livability of that house. So if you're looking at a home that's half finished, missing flooring, or with obvious major repairs needed, just know that can be a problem. I've seen buyers fall in love with a place that looks like a great deal, but needs a lot of work. Then when they're shocked when the appraiser or underwriter says not with FHA in its current condition. The flip side is positive though. These standards can actually protect you from taking on a house that will drain your savings in repairs after you close. All right, finally, let's zoom out and talk process and timeline. For most FHA buyers, the smartest move is to start with a detailed pre-approval. I would love to help you out with that. Not just a quick pre-qualification online calculator. That means we actually review your credit, your income documentation, pay stubs, W-2s, or tax returns if you're self-employed, your bank statements, and your full financial picture. You see, when you do that up front, you find issues early, like an old collection that needs to be addressed, or a bank account that shows a deposit we can't quite explain yet, okay? If everything checks out, you can shop with confidence, knowing your price range and what your monthly payment is. That's how we live our lives, guys, the monthly payment. It's not just about the purchase price range. We live in a payment range. So we know what the price range and what your monthly payment is likely to look like. If there are gaps, you get a game plan instead of rejection and you don't know what's going on. Maybe you need to pay down a specific debt. Let a recent late payment age it out of it. Or to stop moving money between accounts so we can know how much you have. That's all fixable with a plan. And that's really what FHA is. It's a structured path, not a magic wand. There are a lot of moving parts here. Credit, debt, income, property rules, paperwork. Trying to keep all that straight on your own can get overwhelming really fast. To make this easier, I put together a free FHA first-time buyer guide, specifically for buyers like you here in Florida. It walks you through all the key requirements in plain English, gives you the checklist for your documents, and helps you spot the red flags that could slow you down before you're under contract on a home. Calculating all of this and guessing from random articles online is a headache, guys. So this guide lays everything out, step by step. It's linked right down in the description. Go ahead and take a copy. If you're watching this and thinking, I might be closer than I thought, or I have no idea if I'm actually ready, don't let that uncertainty keep you from renting another year by default. Use the guide, and when you're ready, book a quick strategy call with me and add the link in the description. We'll look at your credit, income, and budget together, and then we'll give you straight answers about what's realistic with an FHA loan and what to do next if you're not quite there yet. Don't let fear of being told no stop you from finding out what's actually possible. Go and click the link in the description to grab the free FHA guide or book a strategy call with me. I'm here to help you make a smart move, not a rushed one. And if you found this video helpful, feel free to share it with your friends and subscribe to the channel. Thank you so much for watching, and I'll see you on the next one.